Good afternoon and welcome to IHT's first weekly webcast. Every Friday you can expect to find these short clips on our video library at www.ihtwealthmanagement.com, on our Facebook, Twitter, LinkedIn, and YouTube pages. We'll cover market trends, world events, and we'll even answer questions that you post on our social media sites. To post a question, simply tag @IHTWealth with your question in the comments field. Our goal for these webcasts is to provide you with a consistent source of market news, discuss topics that directly affect your finances, and answer questions that you and probably many of your peers share. These webcasts will always give insights to where we are headed as a company and what to look for as we continue to grow. The big story this week for IHT Wealth was the formal press announcement of the merger and eventual acquisition of Boston-based U.S. Wealth Management. U.S. Wealth is headed by John Napolitano, and he has been a strong force in the East Coast for decades. With this merger, we officially have offices coast to coast. More details will come over the next few weeks. This week, we saw the markets test 20,000 on the Dow repeatedly. After multiple rejections of the all-time new high, the markets ended slightly down. And while volume is thin and many investment teams and their trading desks are empty for the holidays, we're watching to see if the markets will finally start to question the longevity of the Trump rally. So what does this mean for you? Not much. The reality is 20,000 is just a number. The real question is, is it on a tear because the companies are going to start make more money with the prospects of lower taxes and regulation, or is it just a little bit of euphoria that is snowballing? We are concerned that the markets might be getting a little ahead of itself, and we've been looking at options to maybe reduce some risk. Nothing is official yet, but it smells a lot like what took place in January earlier this year. The market started the year down, and then that became the story, which only pushed it down further. This had nothing to do with corporate balance sheets, but instead with a runaway of emotions. The markets are now up since the election, and this has become the story that has fed the markets to go up even higher. How long can that cycle truly last? And that leads us to this week's question, which we've heard from multiple people. What will the Trump presidency mean to the market? Simply put, it means an increase in political induced volatility. He isn't one to hold back his tongue. Last week it was healthcare companies and their drug prices, and the week before that it was Boeing's cost for the new Air Force One. Whether it's through a tweet or straight from his mouth, he has a lot of opinions and he isn't afraid to share them. To what degree he follows up on them is the real question. After he came out against medical drug prices, the cost of the stocks got slammed, but they popped quickly in the next few days as he went on to his next vendetta. As this cycle continues, it will give us an opportunity to buy in, so keep your eyes out for whoever's ire is on this week, because it'll likely be the area that pops next. We hope you find these videos helpful, convenient, and relevant, and feel free to share them with your friends, family, and coworkers. And join us each Friday at 3 p.m. Central. See you next week, and don't forget to tag @IHT Wealth with your questions. Thank you.